Hi, my name is Richard Hutton and welcome to the Exponential Fund, the place where you learn to invest and absolutely crush average market returns. Well, it's been a while since I've made a video. Initially, I skipped one because I was on vacation. I just, logistically inconvenient to record. And then I thought, why don't I just make a video once a month? The thing is, when I make a video, I want to share good information. Not just fluff that's on the news, but, fundamental principles about investing. There's only so many fundamental principles that there are. So, one a week may be too often right now. We'll try this one a month format and see how it goes. So, the performance for last month in June is as follows. My strategy, the Exponential Fund, was down an ouch of 6.31%, but the S&P 500 was even worse at minus 8.39%. Now, if we look back at the entirety of Q2, things flip around. My strategy, the Exponential Fund, is down 28%. Jesus Christ. Whereas the S&P is down 16%. Yeah. That's very bad. So, overall, in terms of returns, in terms of percent change in my net worth, Q2 2022 has been the worst so far. I do not want to tell you how much money I lost because it's a lot. Now, 28% is how much this portfolio went down, but this portfolio is a small percentage of my net worth because most of my net worth was in Tesla and Bitcoin. Yes, and we are now transitioning into the lesson for this week, which is to correct mistakes quickly. So, I admit I have made a mistake in the last 12 months. Essentially, I was too optimistic, right? So, for example, with Bitcoin, last year, I started buying when it was 37,000, 32,000. And I was like, oh my God, this is a huge drop from the all-time highs, like more than 50%. Phenomenal. I bet it will go up anytime. Let me buy. And in fact, let me leverage up. Right? Yikes. Fast forward 6 months, January, Bitcoin is at like 47,000, something like that. And I'm like, fantastic. We're on our way up. We're going to break all-time highs, so and so. So I took on additional leverage. Yikes. And obviously, after that, the market crashed, right? Now, here's the thing. In my this portfolio, the Exponential Fund, I do not use leverage. It is completely unlevered. It is nicely diversified with 20 positions. And whenever I tell people and, share thoughts, advice, I always tell people, God, stay away from leverage, never use it, and so and so. And I'm like, I'm not listening to this advice. So that's bad. So the mistake was being too optimistic, right? Fair enough. I'll admit it. I'm not perfect. So, fast forward a few months. Obviously, the market crashed a lot. And thus, my losses were accelerated. So, lesson learned. I will never take on leverage in the future ever again. Right now, I'm in the process of unwinding that leverage, it takes a bit. It's a process. It was a huge shock. Like, it was a big one, to say the least. Now, when it comes to Bitcoin, let's just clear out a few things. The purpose of Bitcoin initially was to be a payment method, right? Peer-to-peer, so we don't have to rely on a trusted third party like a bank. As time went on, people saw that, well, that's kind of impractical because of the high transaction fees and low transaction volume that the network supports. So, people, transitioned their perspective to, okay, Bitcoin is like digital gold, right? It's a store of value. Fantastic. It's a fixed supply of 21 million coins. So if you simply view it as a savings account that you just put money and leave it there for a long time, and because more and more people will realize and do this, the price will go up. Nice. So essentially, in more technical terms, Bitcoin is a hedge against inflation, right? With fiat currency, central banks can just print an infinite amount of new money for no cost, thus devaluing the currency and, etc. But with Bitcoin, you cannot create more than 21 million. So it's a fixed supply, so it's a hedge against inflation. Now, Bitcoin is a hedge against inflation. We get high inflation. People sell Bitcoin. Now you tell me if this is a good idea. Now, obviously, some people kept buying Bitcoin, but obviously, those were not the majority. So, yeah. I bet a lot of market strategy goes like this. I bet you will sell, so I will sell first. What can you do other than don't use leverage? So essentially that's it, right? It's to correct mistakes quickly, right? I have made a mistake, I admit it, and change. That's it. Right? Thanks for watching. One final note about my strategy. So on eToro, where I trade this, the platform gives me a risk score from 1 to 10, right? So the higher the score, the riskier the strategy. Now, there are many factors that go into this calculation, but one is simply the volatility from day to day. Because we have seen such violent moves, especially to the downside, my risk score has gone up a lot, and it reached 7, and that is an unfortunate threshold because at 7, the platform stops the ability for new people to copy you. So in case you don't know about this function, if you like my strategy, to invest in the 20 largest companies that have been growing their sales consistently over the last few years, so large, fast-growing companies. If you like my strategy, you can go on eToro, make an account, and search my profile like you would on any other social network. It's Richard_Hutton. I will put a link down below. And on my profile, there's a button called Copy. And if you click that, all my trades are automatically copied in your account. So it's as if I'm managing your money, right? You don't have to pay any fee for that, but I am paid by eToro about 2% per year of the assets under management, right? So if you copy me with $1,000, I'll get $20 a year. Now, that's not a lot, but when it comes to large sums, it adds up, right? So if my risk score goes to 7, eToro does not allow for anyone new to copy me. So I was like, okay, the market crashed a lot, but these stocks, these companies are still growing. So, the latest data I have for the first quarter of this year, and I calculated that on average, the sales of these companies have grown 23% compared to last year, right? So in Q1, the economy of the US has declined, but the companies that I invested in actually went up, grew. Phenomenal. But because we're in a recession, everything crashed, right? So on average, these stocks went down 35% since last year, right? Well, if the companies themselves are growing, but the stock price is declining, that's what I call an opportunity. So I wanted to be able to let other people copy me. So what I did to lower my risk score, I simply trimmed my positions, right? I trimmed each position by 30%. So right now in my total portfolio, 30% of the account sits in cash, right? So instead of having 5% of my portfolio in each position, I have 3.5% in each position, right? And my risk score went down to 6. Fantastic. And now new people can copy me, right? So if you would like to invest but don't know how, this is a great place to start. You just click copy and let me do my thing. Now, a note, in the short term, anything can happen, right? Stocks could continue to drop, but if you are patient and you're willing to wait 3 to 5 years, you gotta, I believe there's a reasonable chance that these stocks will perform quite nicely. Somewhere 15, 20, 25% per year is within the range of possibilities. Nothing is guaranteed, but hey, that's my offer. So if you're curious, I will put a link down below to my profile and you can check it out. All right, until next time, thanks for watching.